Hi, my name is Ben. I'm the CEO and co-founder of the Small Medium Business Exchange. Like the other companies today, I'm going to just talk about my company and its mission for a couple minutes, and then after that, we'll just demo the platform, which is probably the fun thing for you. Today, large corporations raise their capital on public exchanges, but not small businesses. Since 1933, it's been unlawful for small businesses to raise their capital from the general public. This means for the last 80 years, small businesses have essentially had access to one funding source, private funding channels, private equity, and a lot of bank loans. Until now. Last year, a new law called Title III went into effect. Title III of the Jobs Act allows a small business to raise up to $1 million a year from the general public. Now, most people are still talking and thinking about Title III as equity crowdfunding, but that's actually short-sighted. My company discovered that you can use the new legal space that's cleared out by Title III to create the world's first small business public exchange, a platform where small businesses can raise money from you, regular, individual, retail investors, and they can do this by issuing shares, stock, convertible notes, coins, or bonds. Especially bonds, in my opinion. Now, why do we need this? What problem does it solve? First is the problem of supply. At the same time that small business funding needs are growing, regulation is actually forcing banks out of the small business loan market. Second is the problem of demand. Millennials do, believe it or not, increasingly have investable wealth. They also have, as we well know, increasingly a penchant for investing, sometimes in alternative assets. But since 2008, they have an aversion to legacy finance. So the question is, who's going to consolidate this $2.6 trillion market, and what role, if any, will millennials play? The answer is a small business public exchange. And Title III, combined with blockchain, now gives us the regulatory green light and the technology to do it. In the future, small businesses will no longer be taking out loans from a bank. They'll be coming to the SMBX and issuing a bond. And millennials will love to invest in these businesses because they'll be helping to create a new kind of financial system. They'll also be getting a good rate of return. They'll be creating a financial system that they own, that they've built, that creates the kind of world that they want to live in. So this is what the SMBX is basically. But it's a primary market where the securities get auctioned, and that's what I'm going to demo you right now. And then after you buy it, so you want to exit the investment, you need to have a way of exiting it. For that reason, we've built a secondary market, a liquid secondary market that can match securities. Oh, thanks. So let's go ahead and just demo the product. Let me go here. Oh, I wanted to tell you, so this is obviously a mobile app, and it's running on our own private Ethereum network, the private Ethereum blockchain. We heavily modified the code base for new blockchain geeks because we needed to fit our use cases. So what you're going to be seeing here, even though we're in alpha mode, we don't go live until the end of Q3 with our first offerings. But what I'm going to be demoing here is essentially the first smart contract-driven small business bond offering. So that's what we're going to be looking at here. Okay, so traditional interface. We've arranged the offerings into cards. Things we think based on your previous investing activity you'd be interested in investing in. If you're interested in low yield bonds, high yield bonds, things that are trending, meaning there's a lot of chatter about it right now, or maybe a lot of activity around it. Things that are trading on the secondary market, or things that the SMBX just wants to profile randomly that day. We can go ahead and click into this. So generally what you would have here is a logo for each of the offerings as well, just like you would on the Robinhood app or anything else. We have Empire FinTech that's in a capital raise right now. We can go to anywhere. Let's go to Gonzalez Flowers and just place a bid. So what we're going to be doing here is bidding on Gonzalez Flowers, which is which is a use case whose identity I've changed just to respect their privacy because I'm demoing it live here. We could click through all this stuff the way you would traditionally in a mobile app, right? You see that there are underwriting model or credit risk model has punched out a range of yields between 6 and 8%, and that's identifying the preliminary risk profile of the company. They're raising $100,000, issuing 10,000 bonds. All the bonds are issued in $10 increments. Their revenue is $1 million, and there's going to be 36 months of payment. So let's bid it. Let's go in here and bid, because that's really the fun part. You can invest any amount you want. You can invest as bonds or amount. We could scroll over here, although again, you can't really see this because of the graphics, unfortunately, aren't fit for this slide. Let's place a bid for 37 bonds. You can see the yields are between 6 and 8%. Let's bring this a little bit closer. Basically, what our algorithm does is tell you that, okay, if you're going to buy 37 bonds, you're putting down a principal of $370. It's going to give you $11.26 monthly. The total return is going to be, for a 6% yield, $405. Now, if there's a lot of interest in the offering, you're going to be building the yield up. We're trying to gamify this experience. Excuse me, if there's a lot of interest in the offering, you're going to be bidding the yield down. And if there's not much interest in the offering, you'll bid the yield up, the way classic free market supply and demand mechanisms work. Let's go over, though. I want a good yield, so let's go ahead and place a bid. What we're doing here is just placing a bid on a bond for 8% in the amount that we have identified here, and we're going to confirm that. We've just placed an order. Well, maybe this internet's going slow right now. Should be going faster than that. But anyways, we just placed an order on blockchain, and that's where it's going to sit until the close of the offering, at which point the smart contracts will execute the securities as a kind of digital IOU for the bonds, at which point the investor can decide if they want to liquidate the investment or hold it for the maturity of the bond or anywhere in between. I guess that's about it.